Whether you're dreaming of a retirement with sand between your toes and a cold one in your hand, hitting the road to chase the winds of adventure, or spending time with your grandchildren, this show is intended to help you get there. Welcome to Coasting in Retirement with your host, Josh Knoll. You've worked too hard throughout your career to spend your retirement worrying. So sit back, kick up your feet, because we've got lots of financial tips and tricks to share to help you get exactly where you want to be. Here's Josh.
Good afternoon, everyone. Welcome in. Welcome to Coasting in Retirement. That's right. Thanks for joining us today. We're excited to have you. Josh Knoll here. Michelle is off this week, but we are joined by a very special guest, Jennifer King of King & King Attorneys at Law. Jennifer, how are you doing?
I am doing well, and I'm excited to be here, Josh.
Well, we're excited to have you. So, say here, we are recording, again, here at Coastal College's recording studio, beautiful downtown Fairhope, ready to put together another great show for those of you tuning in. Listeners, Jennifer and I are here today to discuss financial topics relevant to those of you in or near retirement, living your best life along our part of the Gulf Coast. If you've only got time to listen to one financial show this week, you picked the right one. Here's what we got in store for you today. First segment, we're going to deep dive on our topic of the day. Trust me, you want to stay tuned. Second segment, about 25 minutes past the hour, we're going to do news, headlines of the week. Then at roughly 45 minutes-ish past the hour, stick around for our third segment. We call it Josh's Crystal Ball and Big Mouth. And Jennifer just informed me she's got a bold prediction to make about something that I think a lot of you are going to be interested in again. Just buckle up. We got a lot to get to. Quick background on me for those of you new to the show. Again, my name is Josh Knoll. I'm a fee-based financial advisor. I hold my FINRA Series 65 securities license, and I'm the owner of Gulf Coast Financial Advisors. That's an independent investment management and financial planning firm. We have offices in Fairhope, Orange Beach, and Mobile. You can find more information on me and Gulf Coast Financial Advisors by visiting our website, gulfcoastfa.com, or feel free to give us a call anytime, 251-327-2124. Now, if you just missed that contact info, just grab a pen and pad. We will repeat it several times throughout the show. All right, Jennifer, before we get into our main topic of the day, I'd like to give you an opportunity to tell the listeners who you are and a little bit more about your firm, King & King. The two Kings stand for what first?
Well, it stands for me as the first king.
Oh, there we go.
And Dusty King is my other half. I'm going to say the better half and law partner. And we have an office in Foley, Alabama. But we focus in primary area of our focus is estate planning, and we do that for clients across Baldwin County and really the entire state of Alabama. So we have a combined 40 years of experience in estate planning, and that's what I'm glad and excited today to be able to talk to your listeners about.
Well, I have a feeling Dusty would say that you're the better half, so that's pretty nice for you to say with him not here to defend himself. Well, very good. Well, let's get with our show here. So. Let's set the table. As part of the comprehensive financial planning services that we offer at Gulf Coast Financial Advisors, one of the most important segments of our clients' life that we want to help them get buttoned up is their estate planning. Now, given that we are financial advisors, not attorneys, to accomplish this goal, we often reach out to our preferred attorney partners. And just to be honest with you all, there's no affiliation, but Jennifer and Dusty's firm is always at the top of that list. So while Jennifer and her husband Dusty handle a multitude of legal services, what we wanted to focus on today were the 3 to 4 most common questions that I get from new clients. You good with that, Jennifer?
I am.
Great. So here's what I'm going to do. I'm going to list these questions all together, and then we're going to take the first one and tackle them one at a time. So first up, wills versus trusts. Wills versus trusts. What's the difference? What's the benefits? Revocable, irrevocable, final will and testament, all those things. That is the number one question I get from my clients. Number 2 that we're going to talk about here today, probate. What is it? How's it go? What's the process? How do we avoid it? Can we avoid it? And then number 3, we're going to talk about powers of attorney / advance directives. Why are they necessary? What do the directives ensure? I know I've got a directive with my organ donation. What does a power of attorney help avoid? Things of that nature. So listeners, so first, Jennifer, let's do this. Let's start with wills and trusts. So let's in broad terms, let's first define a last will and testament, and then let's define a trust, and then let's do a little compare and contrast. Floor is yours.
So let's kind of boil it down, because I think this is a good topic for your listeners. There's a lot of misconceptions about that, about both. So a will or a last will and testament is essentially a document that directs what happens to your assets at your death. It does not provide incapacity planning during a client's lifetime.
Okay.
So that's a huge distinction. So I get a lot of people and a lot of potential clients come into my office that say they have a will, and so based on that fact, they think they can avoid probate and a court process.
And that's not accurate.
No.
Okay.
Because quite honestly, it's the exact opposite. So in 99% of the cases, depending on what the assets that the client has, if they have a will, they are in fact going to have to probate that will, and that's the official proving of the will in a court proceeding. That's what probate is. That's what probate means. Let's contrast that with the trust.
Well, before you do that, let me
Yes.
ask you a question, because I've been doing this long enough that I've helped clients kind of work through, not from the attorney side, but I've helped them work through the probate process. On the surface of it, it sounds very daunting. Anytime you tell somebody, hey, the estate's going to go through probate, a lot of times they have this mental picture of I'm going to be in court all the time, there's going to be arguing back and forth, things like that. Does a will help streamline that process through probate?
So having a will is much better than having nothing.
Okay.
In the sense of, when we say nothing, we may no estate planning directions, no documents. So that would be what would be referred to as dying intestate.
Okay.
So it's better than that. However, I'd say majority of our clients want to avoid the probate process simply because of the time constraints. And I know we're going to get to that topic a little detailed.
Right.
But the time constraints, the cost constraints, and just really the headache, overall headache.
Now, again, knee-jerk reaction. I'm going to be the sentinel for the regular person listening to this episode. When I say wills versus trusts, now, a last will and testament, I think, is a fairly common exercise. Maybe it wasn't as common 30, 40, 50 years ago, but nowadays with the internet, you can go in there and at least you can fudge together something, some type of will. However, when I hear trusts, I think much more complicated, much more involved. I don't necessarily put that together with the will, or as a sentinel, I don't necessarily put it together in the same category as a last will and testament. Where am I right? Where am I wrong? What's the differences?
Well, I think one thing is, let me say this, that a lot of clients that we see think they can just have a will. That's it's going to be a cheaper process. They don't have enough assets to constitute a trust. That's typically wrong. A trust is just going to be another planning tool, and most of the time, frankly, a better planning tool, because a trust is going to provide for one thing that a will doesn't provide for, and that's incapacity planning during the client's lifetime.
Very good. All right, now, what type of trusts are there, and is there one that's more used more commonly, or is there one that's kind of like your entry level trust? Is there higher level planning? To walk us through the different types of trusts.
So if almost it's like anything else, you could conceive of it. It's out there. There's numerous trusts, but as far as what I'm going to say is more of a foundational trust is a revocable living trust. So, why would we have that, and why would that be a starting point? There's not an asset limitation on that. So you can have someone with a high net worth to someone that's just starting out in life, and that's still a good planning tool, because a trust can provide some creditor and asset protection that we're not going to get with the will-based estate plan.
Okay.
So just think of a will and think of it as simply kind of a death planning document, because that's when it's going to be effective. But the revocable trust, you're going to set it up. You're going to be the grantor, and what that is just essentially a fancy legal term for who is setting up the trust. And that individual or individuals, if it's a couple, will typically be the trustee of their own trust until they're incapacitated or until their death.
Interesting.
So the trust will appoint a successor trustee in the event of incapacity or at death. So I hate giving this example, but let's use me. Let's say I get in my car today and I'm in an accident.
Right.
And I'm alive, but I'm at the point where either I'm in the hospital and I can't verbalize or I can't make decisions. Well, for me, somebody's going to have to handle my business. Somebody's going to have to handle my personal affairs, pay my bills, basic things. If I've handled my trust properly, and I want to talk about maybe funding a little later with you, funding the trust, but if I've handled my affairs properly, that's my trustee. My trustee may step in, continue my life, continue for me my business. And that's necessary. You're not going to get that planning with the will.
Well, so 2 questions on
Okay.
that. So first, on the backup trustee, if you will, does that have to be a spouse, a family member? What do you normally see? What are the rules around who is your backup trustee?
It doesn't have to be a spouse or a family member. In fact, sometimes that's just a bad option. Let's be candid. I tell clients, if we have somebody that, and just candidly, is not good or not adept at handling their own finances and life's not
They're
in
going to be
order.
worse at handling yours.
That's right.
Trust me on this.
We don't need them. So sometimes it might be a corporate trustee.
Right.
Sometimes I've had clients that do friends or someone of that. So it needs to be, but it typically is in a fiduciary relationship. And I know you know what I mean by that.
I do. All right. And then here's my second point of that. So we're going to be circling back to, this is not a political show, but we've got in our Big Mouth section, we got a thing to discuss around Trump. But when he first got elected, his first term in 2016, I know that there was a lot of conversation about him putting a lot of the assets into an irrevocable trust. So give us what's an irrevocable trust and how does that differ from a revocable trust that you just described?
Okay. Well, and for Alabama, there's different forms of irrevocable trust. So we've got more topics than we can talk about today, Josh.
Yeah,
so,
we'll have to do another show sometime.
Another show. But let's talk about an irrevocable trust from a terms of maybe some Medicaid planning, because I have that comes up quite frequently. So an irrevocable trust, typically we don't put all of a client's assets into an irrevocable trust. And why would we not do that? Well, one, the client wants to retain control over the assets,
right,
and they can't do that with an irrevocable trust.
Rupert Murdoch found that out here recently.
Right.
Yes.
But it's an excellent tool. I mean, I'll use the example. I have clients that have kind of Century farmland property they've maintained in their family. So, we're not going to go and put their regular checking account. I like to say if you need to eat and live and use what, on a daily basis, such as your basic checking account, that's not going into it. But if we've got a savings account, they're not going to necessarily need to be accessing every day, or they're going to maintain and keep their property, then it's a good tool because it's also a Medicaid planning tool. While, none of us want to end up in a long-term facility.
Right.
If we live long enough, and depending on what our long-term care insurance looks like, we may need it. So it's a good asset planning tool. So an irrevocable trust is a good asset planning tool. So those are done for what are considered a Medicaid asset protection trust. And then there's also just an asset protection trust that Alabama has by statute. So I have some business owners and just some other individuals who want to do that simply for the asset protection.
Very good. All right. So let's circle to our next thing on our list. We had mentioned it a little bit here when we were talking about last wills and testaments, but probate. So I gave kind of the general consensus is, oh my gosh, I've got to avoid probate. It's going to be horrific. But what you're telling me is probate is oftenly used, but there are ways to get around it. So let's talk about what is probate. What's that process look like? Is there a way to avoid it? Fill us in on the probate process.
Okay. So probate is the legal process of proving a will. Okay. So if I have a client that has a trust-based estate plan, we will likely avoid probate altogether.
That's interesting.
Okay. And I will say a huge misconception of clients that we have, a lot of times people they think they have one avenue to go, and that's a will. And they think they want to go that route because the cost will also be cheaper. In reality, by the time they get a properly done will, and then we go through probate, and think about who they're putting through probate. They're putting their beneficiaries through it. Typically what happens is the cost is more than a trust-based plan.
That's fair. Yeah, great point.
Yeah.
Right. Pay a little more now to pay a lot less
Right.
later, especially with time and emotion.
Right. And so the other issue is the time that you're spending in the court process. So for Alabama, since we're sitting in Alabama, the minimum is 6 months.
Oh, wow. Okay.
Okay? And the reason for that is there's a 6-month creditor period. So let's just say I have a client that owes no one, okay, and I know that. I still have to go through those hoops. I still have to publish. I still have to get a publication in the paper. The other issue I think that I want your listeners to know is this. If I have someone in an estate that maybe, let's say they may potentially contest, okay, contest the will. Well, even if you've left them out of your will, let's say I draft a detailed will, we do some clauses, we cover all those bases. If I am the probate attorney, and which we would have to do and probate the will, we still have to give all of the known heirs notice of the proceeding. So guess what I just did? Even if I have someone that may not inherit in the will, I've got to notify all those individuals to even get in court.
Right.
So it's just a process when I explain it to people and to clients that 9 times out of 10, they say, ugh, we're not doing that.
Well, so I want to make sure I'm perfectly clear on
Okay.
this. What you're telling me is that there is at least, you can't guarantee any of these things, right? Like in my line of work, if somebody uses the word guaranteed, good luck, count your fingers. But in your line of work, there's at least a better chance of a much significantly better chance of avoiding probate if you have your assets in a trust.
Yes.
Okay, very good.
Yes. And I will say this, when we prepare these trusts, I don't just say, thanks, client. I will follow up and say to them, and I'm about to do that at the end of the year. It's a good time of year to say, have we funded the trust? And what I mean by that, have we put assets into the name of the trust? A trust that we have that we've prepared that looks like a beautiful trust. I've spent a bunch of time on it. The client's happy. If I don't put anything and the client doesn't into that trust, we've wasted our time.
Yeah,
we've wasted our effort.
It's just it's a bucket or
It's
a
a
chassis,
shell.
right? It's a shell.
That's correct.
Yeah, we have the similar conversation with folks that have qualified accounts like a 401k or an IRA. If you've got an IRA but you haven't taken the time to put those assets into there, all you have is an empty bucket.
Right.
Right. Not much use.
Josh, can I say one more thing
You
too
can,
about
absolutely.
About the probate process? So, again, while we hope, all of us hope we never end up in a long-term care facility, but we all know that that's really paid by Medicaid, not Medicare.
Right.
So we've got so many days that Medicare will pay, and then after that, if we need to stay, we're under Medicaid. So one other thing I point out to clients, it's all depending on age, but is look, Medicaid, and we have a state Medicaid office in Alabama. Every state has one. So when I go through probate, I have to get a release from the state Medicaid agency that client that died has not had anything paid by the agency. So they have to release it. If they don't release it, guess what? They're coming after what's in the estate. The Medicaid office cannot go after what doesn't go through probate.
That's a great
huge.
point. Say that one more time for our listeners.
So, yeah, the state Medicaid office cannot go after assets that do not go through probate.
Very good. All right. Our third thing we had on our list, so first we talked about wills versus trusts, then we talked about probate. Third on the list is power of attorneys and advance directives. So I am somewhat familiar with that. My dad and I, and my mom and dad, we have various power of attorneys, especially my dad had some surgeries at one time, and just in case there needed to be some conversations around it, empowered me to make some certain decisions. So in general, are powers of attorney necessary? How are they used? And then pivot that and on the more specific with advance directives.
Okay. So I think, these are documents everyone needs regardless of age. We all want to make this as estate planning is for when you're older. That's not true. I went in, I joke and say about, 10 years ago, I was wrestling with a horse. Not literally, but, anyway, I broke my finger. I go into the hospital. I know the person, the administrator, and they say, well, we need your power of attorney.
You right?
And I said, what all sad attorneys say is, I don't have one.
I don't
and
have
they
one.
said, we need one. You're going under anesthetic.
Yep.
We've got to do surgery. So all that being aside is, they're durable for a reason, and they need to be durable powers of attorney for healthcare and finances. Why? Because in the event that the person that's completing the power of attorney becomes incapacitated, the power of attorney will withstand that incapacity.
Well, and you're in a line of work. I'm in a line of work. Doctors, hospitals are in lines of work where if there's not a legal document standing there, you could have been married for 80 years, and there's just going to be certain conversations that we can't
true.
have, right?
Right. And I tell people that all the time. I know you're married. I know that you're going to tell that to the staff. Guess what? The medical staff or the bank, we know this.
Or financial advisors.
Right, or us. They cannot deal with you necessarily without that legal document. So it withstands incapacity is a big deal because what I see a lot, and it's a sad situation coming into my office, and this happened just this morning before I came over here, and had someone call, and there is no power of attorney, and now we're at the point where the individual is mentally incapacitated. So where am I left? Well, now as the lawyer, I have to tell that person, I'm sorry, but they don't have the capacity to sign a power of attorney, and now we have to go through a conservatorship and guardianship through court. So a whole different, situation and a lot more extensive.
All right, last question.
Okay.
Advance directive. So I have an advance directive where my organs are donated. Now, I tried to be funny with it, and I tried to carve out my liver separately and say donate that to science because but that didn't work. That one got squashed down, but they thought it was funny. I thought that way. But advance directives, what do they do, and why are they important?
Okay. So the one advance directive, especially I want to talk about, is the living will. So that document's going to determine really what your wishes would be, and we are talking about a terminal condition at this point.
Right.
So a power of attorney we're talking about, and it's not necessarily a terminal condition that you may need that document. Those are broader documents. But the living will determines, and it's a directive not just to the medical staff, but also really to your family of what you want in the event you suffer from a terminal condition. So it will say, and I will say this, Alabama has a specific advance directive that is related and specified in the statute. So when we prepare these documents for clients, we include the Alabama advance directive in addition to honestly a more detailed one that we prepare. I like overkill sometimes.
All right, so I'm going to give you an opportunity for the listeners that want to know how to get a hold of you before we wrap up this segment. But just to summarize, everything we just listed, wills, trusts, probate, power of attorneys, advance directives, you help your clients with that. That is your wheelhouse every single day, you and Dusty.
Yes.
Right. Perfect. All right, listeners, if you're interested in starting your own conversation around some of these items, especially if you want to reach out to us at Gulf Coast Financial Advisors, because these are services that we're going to incorporate into our comprehensive financial plan, you can call in and schedule an in-person appointment. Any of our 3 offices, again, downtown Fairhope, Orange Beach, and Mobile. You do that by calling 251-327-2124. And I have that number go directly to me, Jeffrey. It's a lot of fun when people call from the radio. I love it. Or you can reach us through our website, Gulf, like the Gulf of Mexico, Coast, FA, as in financialadvisor.com. On our site, if you're somebody that prefers to type to start the conversation, you can send a direct message or click in the blue button, upper right-hand corner. That'll put a 15-minute introductory phone call on my calendar. Now, wrapping up the segment, Jennifer, for listeners that don't want to just talk to me and they want to go directly to you, what's your best contact info? How do people get a hold of you?
So you can contact us at 251-501-6100. You will get a live person. We have a live person, Kylie, that handles all our intake. You can email us at Foley, Foley, at kingplc.com, or you can go to our website, www.kingplc.com, and we've got an intake form, and we actually we promise, call you back.
And that's King, and then Peter, Larry, Charlie, plc.com, right?
That's correct.
All right, very good. Nice job. All right, folks, coming up next, there's always a lot going on in the world, particularly the world of finance, investments, and legal issues. Every week we scour the internet for financial articles related to our topic of the day. Special articles that pertain to those of you in or near retirement. So join us after the break to hear Jennifer and I discuss this week's relevant headlines in our News Headlines of the Week segment. Stay tuned.
A multidimensional financial services company, Providence Partners serves the needs of independent insurance, financial, and employee benefit professionals. The team at Providence Partners serves other business professionals like property and casualty agencies, registered investment advisors, community banks, and benefit brokers to assist in their clients' risk management planning. Whether an individual or business owner client, this planning includes income replacement protection, planning for extended healthcare costs, family needs, and generational transfers of wealth. At Providence Partners, we give you access to industry specialists. Those specialists focus on business succession, business owner planning, family and household protection, estate planning, planning for that income loss, or planning for long-term care solutions. Providence Partners is an Alabama-based company. We have offices in Birmingham and along the Gulf Coast. Our website is providencepartners.org, and you can reach us any of the working days.
Welcome back to Coasting Retirement. Your host Josh Knoll here. So, as we discussed before the break, every week we scour the internet for financial articles related to our topic of the day, especially articles that pertain to those of you in or near retirement. Now, our job, or at least we think it is to help you all understand how these headlines impact you, especially when it comes to your money. Now, quick note, if you all want to read the referenced articles yourself, we include the links in our show transcript, which you can find on our website, gulfcoastfa.com. Look under the podcast tab. We upload the episodes every Monday after this show airs on Sunday on FM Talk 106.5. So with all that said, and without further ado, here's news headlines of the week. All right, so Jennifer, Michelle normally reads these headlines, but this time I'll be the one presenting them to you. And I'm excited about getting your feedback on a lot of these and a lot of reaction. I thought what we would do, I wanted to you're already super comfortable here, so I put this in there in case you need to kind of smooth out a little. But I thought we'd start with something very familiar to you, and it's a very recent article that I actually found on your website, kingplc.com. It's titled, How to Put Your Business Interest into a Trust. Now, we discussed trust in the opening segment of the show. I thought this would be good for continuing that conversation. We did broad terms discussing about the trust. We didn't talk about putting businesses in there. And what I want to get is discuss some of the reasons for business owners to consider putting their business into a trust, discuss how they do that. And I think probably is most importantly, or very important, discuss some of the potential downfalls of this action, especially if the paperwork isn't filed properly. So I'm going to give you the floor. Would you mind to walk us through a typical trust conversation with a business owner considering using one of these? Sure.
And Josh, you're correct. And there's a lot to unpack with business owners and estate planning. First of all, let's talk about the entities themselves. We've got ownership interest in an entity, let's say such as an LLC or a corporation. Those ownership interests are considered personal property in an estate. That's not a,
I did
common,
not know that.
Not common. And so what I like to tell clients is let's also think about, I'm going back to this probate issue, do we want to have those businesses push through a court case, a court proceeding in probate? And most of them look at me and go, absolutely not.
No way.
And so typically we have to plan for not just how that ownership interest would pass upon the client's death, but also what if the business owner was incapacitated? And so how is that accomplished? So very, very often trusts are the best and widely used mechanism to establish how that would be handled upon incapacity and death. So in addition, though, when I look at these things, we kind of going through what a conversation would look like with this client. I want to see their operating agreement. I want to see the formation documents. If the business is owned by more than one person, as far as a business interest, I want to see, do they have a buy-sell agreement? Have they made some provision for those events like death, disability, incapacity, retirement, all those things? I hate to say, but a lot of times the answer is they haven't. So many times my planning in this is we need to clean up the business documents, and then additionally, kind of in conjunction with that, we need to handle the estate planning side. So many times what you'll see is that, and you know this, Josh, that you'll have a business owner that's deeply, deeply involved. It's like they're, figuratively speaking, their baby.
Right.
This business is. But maybe let's say it's a spouse, but the spouse may not be involved. So we may have personal assets that we do a trust or we do a setup for that, and maybe the spouse is the trustee with handling the personal affairs, but the spouse wants no part of handling that business if either their other spouse were disabled or at their death. So a lot of times I do prepare business trusts that are distinct from the other, say, personal assets. So we kind of have, we're kind of toward the beach. We can talk, I always talk in terms of sand buckets. People laugh, but it's just a good way to kind of figuratively think about, or just buckets in general. So we may have the business bucket that keeps that distinct. And so then, because that's personal property, I've got to make sure that the actual shares, if there's a corporation, so think stock, if there's a corporation, shares in the business, or membership interest if we're an LLC, how does that get to the trust? And typically, that's an assignment. So that's an assignment of stock, or that's an assignment of membership interest, and that's done when we're doing the trust planning.
Well, and I can speak as being an entrepreneur now for 25 years. I tend to be, if Michelle is here, she would be shaking her head. I tend to be sometimes irrationally optimistic, and that even extends to my own mortality and morbidity. And, a lot of times I don't even think about it. I've got a birthday coming up, and it's a big one. And, you're sitting here, you're saying these things, and I'm thinking, well, shoot, I haven't done that yet because I don't think I'm going to get hurt or incapacitated or get dead. So you business owners that are listening, I mean, this initial conversation with you at your team there at King & King, what are we talking, an hour to kind of live?
Probably, honestly, 2 hours.
Right.
I mean, this is a lot. And usually, you know this, Josh, sometimes they don't have one business. If you've got that entrepreneurial spirit, guess what? You may have 5 businesses. So a lot of times I spend a lot of my time just begging that person or persons to come in and actually, sit with me for a minute versus running on to the next. They're busy. We're all very busy. So, but I've had this happen and had it unfold. And sometimes what this conversation looks like is maybe there's a key person in that business that we actually end up structuring a buyout. Right. I'm not saying instantaneously, but maybe they give some ownership interest, and then we have that, and the client, so to speak, can step back a little bit. I mean, not necessarily, but we have that discussion, especially in those matters where maybe the spouse really doesn't want to impart in the day-to-day.
Well, what it can do is it can spur a succession planning conversation. And just for wherever it's worth, listeners, Gulf Coast Financial Advisors, Jennifer is talking about buy-sell agreements. We often work with the funding side of that. So if you're interested in having that conversation, give us a call. All right, second article of the day. Now, this is an article from a source that we reference often, and for whatever it's worth, listeners, it also happens to serve as a custodian of funds for my advisory clients. That's Charles Schwab, or like Michelle likes to refer to him, old Chuck Schwab. So however you refer to him, Charles, Chuck, Charlie, they've got an article on their site on schwab.com called 5 myths about high net worth estate planning. Now, there's only 5 bullet points in this thing. So what I want to do is I want to list each one and get your feedback on each one. Is that good?
That's good.
Okay, so here we go. So 5 myths about high net worth estate planning. Myth number 1, once I create a trust, my assets are protected. True or false?
False.
All right. What do they got to do?
So a trust without funding is just paper.
There you go. Very good. Perfect. Myth number 2, once I craft an estate plan, I'm done. Wrap it up. I don't have to do anything else. True or false?
False.
Okay. What's required to make that thing actually do what it's intended to do?
Well, we've got to fund it, and life changes. Some deaths occur, births occur, maybe a divorce has occurred in the client's life. So we cannot. I had that happen, Josh. Don't laugh. I had somebody that literally left, did not change their estate plan. Now, and we were it was, yes. So
we see it on the beneficiary side.
Yes.
Like, hold on, I haven't been married to that person in 15 years. Well, as far as the insurance company is concerned, the money's going to them.
Had it happen, unfortunately, in a matter.
I understand. All right. Myth number 3 of our 5 myths. My spouse automatically inherits my unused lifetime estate tax exemption, which, not to jump ahead of you, we're going to talk a little bit more about that at the end of the show. But my spouse automatically inherits anything that I don't use on my estate tax exemption. True or false?
False.
Okay. How does that actually work?
So that actually works that the spouse must claim any unused portion of the exemption, and it has to be done on the estate tax return, typically within 5 years of the death.
Perfect. Very good. All right. Myth number 4. Estate planning is only about death and taxes. What's the one certainty in life? Death and taxes. Estate planning is only about death and taxes. True or false?
False.
All right. What estate planning? Now, we don't have time to list everything, but in general, when you got somebody that's coming in that has done a great job of building their life, they've built a business or they've been a dedicated employee and they've accumulated some assets. And like you said earlier, one of the co-hosts we have on the show named Jay Stubbs, I always ask him, well, who needs the estate plan? Who actually has an estate? And he says everybody has an estate, whether they realize it or not.
True.
So what are some primary goal are we trying to get above and beyond just the death and taxes part of estate planning?
Incapacity planning. If we have children, though, I want to mention this. It doesn't get mentioned enough. Guardianship planning. If we've got minor children, the last thing I want is for clients to end up litigating if something were to happen, where those children live.
Yep, perfect. All right, and then final myth number 5 on this article that's on Schwab.com. Myth number 5, my will dictates who gets my assets, or what assets?
False.
Okay. Well, what does it do then?
Well, it dictates maybe some.
All right.
But being in your realm of work, that maybe we've got investment accounts that have beneficiaries. Maybe we've got insurance policies. Maybe we have bank accounts that the client decided to jointly title or have a payable on death designation. So some of those, I like to say, kind of contract beneficiary assets may pass outside of that will-based and the will document itself.
Well, very good. I think we're going to talk a little bit more about that as I transition to my third article. So we referenced an article on your site, kingplc.com. Now we're going to reference an article on my website, gulfcoastfa.com. I've got a recent article. It's got a ridiculous title. It's called Taking Care of Your Family After Your Passing, here's how to write a letter of intent during the estate planning process. Now, I'm going to be honest with Jennifer and with listeners. I didn't write this article. I'm sure an attorney wrote it somewhere down the line, but I chose to put it on my website because I thought it helped fill in some of the more specific details that may not be included in that final will and testament, which is often trying to get the will's trying to get the big stuff sorted out, like you said. And just a quick personal example, when my grandparents passed away a number of years ago, they did not specify how certain personal belongings needed to be distributed. And I got to tell you, listeners, I was amazed at how attached some of my family was to this stuff, right? I'm not making fun of them. I didn't think about like these different things in the house that certain people wanted them, and some of the stuff 2 people wanted them, right? Mm-hmm. So do you encourage your clients to write a letter of intent? And if so, what are they trying to accomplish with it?
Well, I think the letter of intent's good, and I encourage pre-planning as much as possible. So I think the letter of intent, yes, is encouraged. And it can be from everything from personal property to maybe there's instructions you can laugh on maybe pet instructions. I mean, that comes into play. I actually also utilize a personal property memorandum. So if I beg clients to do it, if I have clients that, let's say they don't want to list specific bequests in their trust or their will, and I use these in really will and trust-based plans, then I give them as part of their estate planning and personal property memorandum and say, for what you've just described, that look, let's not have them hash out who's getting, the china or the couch or some significant item.
Or an old painting or a picture or anything, right? Anything with sentimental value a lot of time.
Anything of sentimental. Doesn't have to be anything of this, tangible, huge value. It may just be sentimental value, but that's valuable too. And then they will complete that, and it will be incorporated by reference into the will or the trust.
Perfect. All right. So our last article of the day. Now you brought this to the table, and I got to be honest. I was not even thinking about this, and it makes me feel like I'm 100 years old. But because I should be thinking about this. But it's a recent article on Fidelity, Fidelity.com's website. It's called Estate Planning for the Digital Era, and it's got a subtitle. It says, "As owning digital property has become the norm, estate plans need to employ new strategies." And once you pointed that out to me, I thought, well, duh. I have got, in my line of work, we have a certain physical presence we have 3 offices. We've got office equipment, we've got computers, we've got all this stuff around the business. We got the brand value and all those things. But a lot of the value is extracted from just on the business side. Forget the personal. Just on the business side, my website has certain value. My social media, my YouTube, all this stuff that these videos we've created over the years. And I just to be open and honest with the listeners, I haven't done anything to pass that on. Heck, I'm not even sure where the passwords are at. So you brought this up, so I'm going to give the floor to you. With digital assets, that's important. Even with somebody that's older, that they still have a digital footprint, right?
Everyone has we all know this. Everyone has a digital footprint. So especially some of my older clients, like, we do not want to do this. And I said, it will help those that your loved ones and your beneficiaries if you will do it. Because think about we all have an Amazon card. So we're talking about credit card. I'm not just in what Josh described with his business is valuable. Let's think about that. From the business perspective, if down the road we have a business and we need to sell it, guess what? Wouldn't it be viable and necessary for all that information to get passed down and it would promote the marketability of that asset?
100%. That's a great point.
But additionally, for those of you that don't have a business that think, well, why would we need that? Well, you still got usernames, you've got passwords, it's what you've got email accounts, social media. I've got 5,000 photos on the cloud right now. So, and I will say I'm endeavoring to do this from a personal standpoint because I'm going to use me. If something were to happen to me right now and my husband together, who is going to handle, I've got personal and business. So I've got all those passwords, all the information for our business that who's going to be able to access that to continue that business, to wrap it up, to wind it down. So there are apps, there are encrypted and secure apps. I'm not here to advocate for one particular one other than to say, I like the cloud-based because think about how much our passwords change for, daily on accounts. But if you don't do that, and I have a few clients that just say we're not doing that, I give them at least a spreadsheet and I list it by category of what we're talking about for these accounts. So maybe we've got a financial, we've got a credit card one, and that way it's given because it would also let your beneficiaries have quicker access. Let's just think about that too, to continue kind of handling the bills until everything gets wrapped up in your estate. And I'm including that with a trust, until it gets handled.
Well, while you were talking, I just looked at my Google passwords and I've got 142 saved in there. So yeah, I need to make sure somebody has that information.
Right.
Great point. All right, well, great job with the headlines. I argue these are all important pieces of information that impacts those of you listening that are in or near retirement. Now, listeners, if you're interested in starting your own conversation around comprehensive financial planning and incorporating estate planning into that discussion, we encourage you to reach out to us. You can schedule an in-person appointment at any of our 3 offices, that's downtown Fairhope, Orange Beach, or Mobile, by simply calling 251-327-2124, or you can reach us through our website, gulfcoastfa.com. Real quick on this segment, Jennifer, if somebody wants to contact you directly, remind them one more time.
Okay, 251-501-6100 or www.king, King, and then it's P like Paul, L like cat, L like land, C like cat.com.
Very good. All right, folks, coming up next, Josh's crystal ball and big mouth. What have been some of my predictions? Have I been right? Was I ever wrong? This is the part of the show where Michelle eviscerates me at times, Jennifer, just so you know. Okay. But we got you and I are going to play a little bit more of tennis back and forth on this coming up. So, what do we think is going to affect investors and retirees in the near future or possibly even the distant future? We talk about all these things and we get to poke a little fun at some of our predictions. Stay tuned. Whether it's building a business from scratch with your own 2 hands and wanting to maximize the financial impact of those sacrifices, or growing a great nest egg by being a dedicated and reliable worker for years, or choosing to live a life well within your means in order to accomplish a lifelong dream of retirement, the last thing you want is to go with the wrong financial advice after you've worked so hard to accumulate your assets. You've also probably spent most of your life putting others' needs ahead of your own, and now it's your turn. We can help. Gulf Coast Financial Advisors is a locally owned, independent, fee-based financial planning, investment management, and tax planning practice. We have offices in Fairhope and Orange Beach. We serve all of Baldwin County and the Gulf Coast. We also have an easy-to-understand fee-for-service model with no sales quotas, no proprietary products. Our ultimate responsibility is to our clients' goals and dreams. You can reach us at 251-327-2124 or find us online at gulfcoastfa.com. That's GULF like the Gulf of Mexico, Coast, FA as in financialadvisor.com. Welcome back. Your host Josh Knoll here alongside our very special guest. That's Jennifer King of King & King Attorneys at Law based in Foley. So, Jennifer, I am opinionated. I've known you long enough to know that you are too. You have strong opinions. I would say I've always argued that a radio show host wouldn't be very interesting to listen to if I didn't. And you and I are both paid in our respective professions to offer professional guidance and opinions to our clients. Otherwise, what use would we be? So now sometimes I feel so strongly about something that I'll talk about it publicly. I do get nudged every now and then when I'm out and about on something maybe I said that didn't quite hit the mark. But a lot of times I tend to be, as you know, I tend to be, I think, justifiably skeptical of my own industry. Yeah, you had a quick story before we got started about a client that had dealt with some headaches with a financial advisor that was talked down to him, right?
Right.
And some of those things really aggravate me. And regular listeners know that sometimes I use this segment to talk about the things that are irritating Josh. But on this time, what we're going to talk about, so we're going to get at it with Josh's crystal ball and big mouth. I'm going to set the table for you this way. As we discussed in the beginning, and we discussed multiple times in the show, not a political show. So anything we say after this point, listeners, we're not taking one side or the other. We're just talking about what's realistically ahead of us. The quick story, my grandparents on my dad's side, who I was very, very close with, spent majority of my youth with them, my grandma and grandpa Knoll, Eldon and Virgie. They never had a lot of money. I'm from the Ozarks, but they did a good job. They raised 7 kids with none of us, and I was one of the grandkids, one of 20-some-odd grandkids. None of us ever went without. They didn't have a lot of money, but they definitely had land. They had accumulated. My grandpa had bought acreage back in southeast Missouri in the Ozarks. I mean, some of the stuff he bought for like $5 an acre, right? And as time had gone on, he had accumulated this land, and they both lived for a very long time. You'll appreciate this. When they passed, they were 72 years old. My grandma went first at 89, and my grandpa went out like a champ. Not to talk too much about my grandparents, but he called his shot. He told all of us, I'm going to see that woman to rest, and I'm going to join her. And he died about 5 days later. Well, the point of that story is they just happened to die in a year where there was no estate tax exemption. Not that they may have, if it had been in the 90s, they definitely would have chinned the bar and there would have been a tax hit to their estate. But they died when there was no estate tax exemption. Fast forward to today, the estate tax exemption, which I'm going to let you define for the listeners, okay. And then before I hand it over to you, it can be a little bit of a political football, right?
Right.
And we have seen it, listeners, that the estate tax exemption right now, you can correct me if I'm wrong, Jennifer, is somewhere around, it's close to $14 million per person, right?
Yeah, 2025, it's going to $13,990,000 for an individual.
And most people don't realize this, but in the late 90s, it was as low as $500,000. So right. Quickly, I'm going to turn the floor to you. What is the estate tax exemption, and what is your bold prediction now that we have Trump back in office around this, and how does that impact your line of work?
So it definitely impacts our line of work. So, that's a huge number, almost $14 million for an individual.
Well, hold on. Let me jump in. What's it mean? Does that mean that's a level of the state that doesn't get taxed?
That's correct. Okay. So I can pass. So for an individual, if I die in 2025, okay, I can pass $14 million in assets to my loved ones and not pay any estate tax.
And that's irrespective of probate or not probate.
Right. That's nothing. Right. Exactly. And if it's a couple in 2025, it's $27.9 million. Right. Okay. So, but here's the but that's kind of been a buzz of the estate planning community. It's scheduled to drop to, for an individual, $7 million in 2026.
That's when the Tax Trumps and Jobs Act technically expires.
That's correct.
All right.
So, and so that's a huge, as we all know, that's a huge jump because think about it. The estate tax, when people say, well, I won't even meet that threshold, well, you might, because think about what is included. It's everything. It's life insurance. So don't think about necessarily probate assets versus non-probate assets. Think about everything you have. Real estate, life insurance. A lot of us are maybe having pretty chunks of a life insurance policy. We've got investment accounts. Everything's included. So my huge, and I'm tentative to say this because your listeners may come back and give me the a big kick, but I'm throwing out there to say I'm going to gamble and say that I don't think that the exemption sunsets, which means I don't think that we're going to lose that large of an exemption.
You think they're going to find a way with a Republican-controlled Congress to continue that high exemption?
I do.
Now, I'm going to counterpoint you, and I think that they're not going to completely get rid of it, though, because I think that there's pressure to get rid of it, but I think it's one of those, it's like red meat. Because here's the thing, folks. Even historically, let's say in the last 20 years, because the estate tax exemption has been so high, it's actually only affected a very small percentage of American households, right?
That's correct.
So it's an easy political football to point to that, to be honest with y'all, typically is somewhat irrelevant to everybody's working life, right? The danger would be that if you swing, our politics tend to swing pretty radically back and forth every 4 to 8 years. If you swing the other way, and if you've pushed too hard while you've had your time, you're going to have a counter push back the other direction, which may make that, I agree with you, there's a chance of it extending, but it also you could push so hard that now it gets pushed down to 2 or 3 or 4 million. Right.
And that's true.
And the other point I'll make is, especially for you, not that land along the Gulf Coast hasn't appreciated in value, but you and I have clients that have generational land in Baldwin County that has 10, 20, 30x in value over the last handful of years, right? All right, very good. So you heard it here. So we'll see.
We will see.
Yeah, she'll be back on the show again, and we'll monitor that situation. All right, well, listeners, I hope you enjoyed a little history of how Jennifer and I form our opinions and our predictions. And more importantly, we're willing to talk it out, what we think is going to happen. We don't have a crystal ball, right? Josh's crystal ball is really just a joke. But these are part of the conversations we have with people, because what we want them to be thinking about is you want to have common sense when you're planning for these things, and you're not necessarily planning for the worst case scenario, but what you're trying to plan is for as many scenarios as mathematically possible. Is that fair?
That's fair.
All right. So, folks, if you're interested in starting your own conversation about these retirement goals, dreams, financial planning, estate planning, we invite you one last time, reach out to us. For me, at Gulf Coast Financial Advisors, you can schedule an in-person appointment at any of our 3 offices in downtown Fairhope, Orange Beach, or Mobile. You do that by simply calling 251-327-2124 or reach us through our website, gulfcoastfa.com. On the site, you can send us a direct message, or upper right-hand corner, there's a blue button. Click it, put a 15-minute introductory phone call on my calendar. Quick note, if you want me to call you, make sure you include your phone number and tell me to call you. Otherwise, I'm assuming you're calling me. Now, again, if those of you want to bypass me and go straight to Jennifer, I'll give her one last opportunity to give her contact info.
Please contact me at King & King at 251-501-6100. And also, I'll say to listeners, if you catch me after hours, we're going to add a new booking, so you can book online, which I think is convenient. Or if you just want to message me, you can also message us through our website at www.kingplc.com.
Boy, that hour flew by, didn't it?
It did.
Isn't that quick? Isn't that amazing?
It did.
Well, you did a fantastic job, and I can't tell you how much I appreciate you coming in and the job that you've done with the referrals that I've given you. You all have done a great job down there. So, folks, that's it for us this week on Coasting Retirement. I want to give one last huge thank you to our guest, Jennifer King of King & King Attorneys at Law. Thank you to our show sponsor, that's Providence Partners and Mr. Jay Stubbs. Thank you to our awesome radio station, that is FM Talk 106.5 out of Mobile. Thank you, Celeste, I know you're listening. Many thanks to the provider of our show music, that is local band Sloth Racer. Huge thank you to the show producer, that's my son, Peyton Knoll. He's in his freshman year at Auburn. And as always, my sincere appreciation for all of you out there that have been listening and joining us on this journey. We'd love to be a part of your journey as well. Till we talk again next Sunday, have a wonderful and productive week. This has been Coasting in Retirement with Josh Knoll. Gulf Coast Financial Advisors, LLC, known as GCFA, is a registered investment advisor offering advisory services in the state of Alabama and in such other jurisdictions where it is registered, filed the required notices, or is otherwise excluded or exempted from such registration and or notice filing requirements. Registration does not indicate or imply that GCFA has attained a particular level of skill or ability, nor does it constitute an endorsement of the firm by the Securities and Exchange Commission, the SEC, or any other state securities regulator. The Coasting in Retirement radio program serves mainly to disseminate general information, including those pertaining to GCFA's advisory services, together with access to additional investment-related information, publications, materials, and links. The publication of this radio show should not be construed by any client and or prospective client as GCFA's solicitation to effect or attempt to effect transactions in securities, nor should be interpreted as GCFA providing personalized investment advice or any type of professional advice for compensation wherever this program is broadcast. Any subsequent direct communication by GCFA with a prospective client will be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. Certain information, news stories, headlines, data, charts, graphs, figures, or statistics presented on this radio program may have been obtained from third-party sources that are believed to be generally reliable, but which GCFA may not have independently verified. GCFA does not and cannot guarantee the timeliness, accuracy, or reliability of any such third-party information and undertakes no obligation to update or correct any information that may become obsolete, unreliable, or inaccurate. This radio program also contains the opinions, views, and perspectives expressed by Josh Knoll and any other GCFA representative, which are solely their own and do not necessarily reflect the opinions, views, or perspectives of GCFA as a firm. Such personal views and opinions should not be construed as endorsements or professional advice from GCFA. GCFA makes no representation or warranty regarding the accuracy, completeness, or reliability of any information on this radio program and disclaims any liability for any direct or indirect loss or damage incurred from using or relying on such information. GCFA and Providence Partners are not affiliated, nor are any of their respective representatives.